No matter your age, your plan for retirement can start today. From the News Channel 5 Network, this is the Retirement Report.
Good morning. Welcome to the Retirement Report. I'm Hank Parrott, your host. Going to be talking about taxes in a different way today. You know, we're always talking about preparing for your taxes, how to save taxes, putting money maybe into a 401k, maybe increasing your contributions. There's a way that you can reduce taxes, or any other company type plan like a 403b or a 457 or a thrift savings plan, a TSP. So these are ways that you can reduce taxes. Of course, IRAs, SEP IRAs, other ways. If you're self-employed, that's a great way to put away some tax-deferred dollars and help reduce your tax bill. But here's another part. What about when you have to start taking money out of those tax-deferred instruments? Okay, this is where thinking ahead it can be very important. Think about this. When you're looking at that 401k or TSP and you're thinking, oh, I've got maybe, hopefully, hundreds of thousands of dollars saved in there. How much of that is really yours? You know, I mean, you're looking at that because a lot of times people ask, how much do I need to save, right? Isn't that big question that everyone wants to know? How big is the number I need to have saved up to be able to retire and not have to worry about running out of money in retirement? And of course, the real issue here is not that of how big the number is. It's important, of course, but it's also the income part of that is why it's important. So the bigger the number, you would think the bigger the income. However, we see many times where people make terrible mistakes in the way that they take money out of their retirement accounts. And what does that mean? That means that they can increase the taxes, which reduces how much of that they get to keep. So imagine this. You've got your 401k, you're looking at it, maybe you're lucky, you got, say, $500,000 or $1 million maybe saved up, whatever it might be. Okay, you look there and you're thinking, I'm doing pretty good. Look at all this money I have accumulated. But guess what? It's not all yours. You may have it's all your money that went in there, but you didn't pay taxes on it, did you? So guess what happens when you take it out? You're going to have to pay taxes on it. If you take it out prior to 59.5, you may even have a penalty on that tax. All right, and there's another penalty we'll talk about as well. So when it comes to your taxes and your retirement accounts, this is one of those areas you want to think about on that retirement account. So what if the way you take it out could cause you to pay 50% of it in taxes? What if, in fact, you look at your number and it's really only worth half that because of how you take it out could reduce it by that much in taxes? Now how confident do you feel about your retirement? So if we could show you a way, and there are a lot of strategies for this, remember we can reduce that down to 10 or 15% is all you'd have to pay in taxes rather than 40 or 50%. Now we're going to keep more of that money, and that's going to mean more income that you get to keep as well, that you get to spend on the things you want as opposed to just turning it over to the IRS for them to spend the way they want. Okay, so those are the things we're going to do today. We're going to get into that and more about taxes, but a little different approach in terms of the kinds of things we're going to be talking about. They're talking about hidden taxes, or taxes we don't necessarily consider, not that everyday part that we deal with. So today I have my special guest. Dr. Friday is on the show today. She is the tax expert when it comes to individual and small business owners, and she's an enrolled agent, which means she can, if you're having tax problems, she specializes in that. And I think you said you're going through a number of audits right now with yeah, clients that have come in?
We have 4 audits going on in our office right now, 2 with the IRS and 2 with the Department of Labor in Tennessee.
Okay, in the Department of Labor, they usually get into payroll kind of things?
Yeah, they get into payroll, but amazingly enough, they also get into full-blown IRS audits. Basically, you're providing them with your tax returns, your general ledger, all your bank statements. They're looking to see if you have unclassified or 1099 people that should be employees. They're making sure all the numbers match. Maybe you claimed one number on a tax return and you can't justify that. They're doing the exact same thing that the Internal Revenue. In fact, a lot of their funding is coming from the federal department to basically help. There's a big release of federal funds to help the states maybe be the front line to helping them find some of these mistakes and things happening that then can lead back to the IRS.
So this is one of those areas then where the course, right? So you now we've got state of Tennessee helping the federal government collect more taxes from you.
Yes.
So do you see they've got a pretty good plan, don't they? How to get more tax from you. So your plan, if you need, and this is the other part, I'm saying your plan because the hope is you have a plan. All right. If not, that's what we're here to talk about. We need a plan.
We definitely need a plan.
We just talked about their plan is getting bigger and bolder in so many ways. Tax collections with regard to the state of Tennessee, with regard in all states.
Well,
that's not
and
distant.
actually, I was at the IRS office the other day, and now starting in July, they are now using outside collection companies. That just passed.
Wow.
So now, don't be surprised if you start getting a call or a letter. First, the Internal Revenue Service will send you a letter, and on it there'll be a 6-digit code. You give that code, and they'll give an answering code, which you have in front of you, so you know you're physically talking to the collection company, not some scam, right?
Right.
But now you've got a collection company that can now be calling you for collecting of IRS debt. So, and it will be through phone calls, which of course we've had a lot of scams with the IRS and phone calls. So if you hang up and they're not getting it, they have options and ways of collecting, just like a collection company. So just another little phase we're going through.
And this is one of the areas when it comes to taxes, by the way. Even if did you realize that they can garnish your Social Security income?
Yeah. Disability?
I mean, again, their plan is getting stronger and stronger when it comes to tax collection, when it comes to the tax laws. Understanding how these tax laws work can make a huge difference in how much of your money you get to keep.
Right.
All right, because it's not just what you make, it's how much you keep. You build up this huge 401k and you're thinking, oh, I'm in really good shape. But if you make errors in the way that you take that money out, you're going to be just seeing that money drift down with taxes. Taxes is one of the largest expenses you're going to have in retirement, especially when it comes to your retirement accounts. Yep. And when it comes to retiring and you start needing that income, right, you've built that money up so that you can use it for income in retirement to replace the income that's gone now with the wages that are gone, right? So I'm retiring, there goes the job, there goes my paycheck. How am I going to replace that? Right. I'm going to need it from my retirement accounts. Well, if I'm not tax efficient in the way that I've both set them up and then most importantly in the way that I take money out, then I may in fact reduce my overall lifetime income. It could also help, and this is one of those things we talk about, one of the biggest fears is running out of money in retirement. Tax planning. This is another area, by the way, the team approach. I'm going to touch on this real briefly. When it comes to the team approach, one of the reasons that Friday and I work together, and the same thing with working with an estate planning attorney and also talking about taxes that could be involved with your estate planning, whether it's wills, power of attorneys, trusts, whatever kinds of things you've structured. There's another way. There's another area in which it's very important to be thinking tax efficiency. When it comes to working as a team, we make sure that one's not doing something that's going to be counterproductive to the other.
Absolutely.
That we're not going to maybe, oh, I saved a few dollars in tax this year, but now I've created a situation where down the road I'm going to have bigger taxes. Sometimes we can do Roth conversions, as an example, to create tax-free accounts, so that when it comes time for required minimum distributions at 70.5, we can have more control of that money and reduce potentially the taxes. We're always looking at, and we're going to talk about this more too, this strategy and how this works. All right, one of the things I'm going to help you with as well, for the first 10 callers to my office, the number is 615-376-5325. I think it's on your screen. So if you call my office, here's what we're going to do for you. We're going to give you a free retirement income analysis. There we go. All right, so with that free income analysis includes tax planning, and this is where I was going with the advisor thing. If you have an advisor that's just talking to you about investments,
oh please,
it's, that's a problem, right?
Yes.
Think about it. What about the taxes on those investments? There are tax efficient ways to invest that can minimize taxes and actually increase your returns.
Oh yeah.
Have you had that conversation? When it comes to talking about tax planning, it's huge. As I said, 30 to 50% difference in how much of your money you get to keep based on tax planning. And not having a plan, I saw a great graph one time and it showed this is how much you'd pay in taxes in this huge dollar amount, and then it shows how much, this is how much most people pay rather, and then it showed half that as an amount of what they could be paying. And what's the difference? Lack of planning, right. Not having a plan. So we're going to talk more about that. But again, first 10 callers, you want to have a plan? We'll help you get a plan. 615-376-5325. Tessa's standing by. She'll get your information. She'll send you out a checklist of things to bring to your appointment. We will do up a full retirement plan for you, income plan for you, including the the tax planning part in that, and we can bring Dr. Friday in to meet with you as well, so we can do an analysis of your taxes, your current tax return, and look for ways that we can help you both reduce your taxes now, but also, more importantly, over the long term. Tax planning isn't something you do once, right, and don't have to do again. It's kind of like eating. You have to do it all the time. Yeah. Okay? Maybe less sometimes than what we're doing right there, but when it comes to tax planning, more so. All right.
Because that was the same thing you were mentioning. I had 2 cases during tax season where they went to their financial person and said, I want to take this much money out. They said, okay, we'll handle the taxes. And the only thing they took out in both situations was the 10%. So when I prepared the tax return, both these people were under the age of 59 and a half. They owed the full amount. Well, these people didn't have any preparation. They did not know that they were going to still owe that money, right? So when I'm the bad guy in a sense.
So they're thinking it's just a 10% penalty and no taxes?
No, the financial person said both of them in different situations, but completely said, they said that they took out all the taxes I needed. And that's a very misunderstanding. That the financial person may have said, I'll take out the penalty. I don't know, but they interpreted both in completely different financial firms and everything. Both cases, they basically interpret that as all the taxes were taken out. So I mean, both cases they owed thousands and thousands of dollars. Now they've got a loan officer with the Internal Revenue Service, right? That they're charging, you know, when it's all said and done, 25, 30% penalty interest and all that on this money that they didn't pay to the IRS. That they may even have to go borrow or take more money out of the 401k to pay the IRS, which just leads into a whole nother bleeding, right? I mean, it's just a constant thing. So
we'll call that the death spiral for your money, right? Here you go, you take out this amount, you've got penalties, you've got taxes. This is one of those areas, by the way, and I run into this and met with a gentleman just yesterday, in fact, and one of the things that this misunderstanding of tax withholding and your actual tax bill, okay? 2 totally different things. But we're going to take a break and we're going to delve into that in a little more depth, because this is one of those areas that I've seen more people get tripped up on and have these bad experiences, and we're going to show you how not to have that. But first, a quick break. Join us here. We'll be right back on the Retirement Report.
This is